Here to break down the numbers is analyst Peter Misek. He's a managing director at Jefferies and Company. Peter currently has a buy rating or buy recommendation on Apple's stock. And Peter, would you agree with Larry that this is just a calendar thing, that it just has to do with inventories?
A lot of inventory recognition issues for sure. There was some delay in purchases, but net here, we don't think there's any underlying change in demand. So yeah, we would agree.
So basically, we're going to see this made up in the current quarter then, Peter?
Yeah, we think that the 2.4 million shortfall could be more than made up. In fact, we think there could be a 3.8 million bump. We think Sprint and KDDI, for example, had iPhone 4 inventories that weren't recognized in the September quarter that are going to be recognized in the December quarter. And we're going to have what we think will be channel fill. So we think there's a couple of big drivers here.
Now, Peter, we've been talking to Apple analysts all morning long, and all of them seem, again, quite, it's hard to find anybody negative on Apple, right? Everyone is quite positive on Apple. But don't you think that this report shows some vulnerability in Apple for being too dependent on the iPhone franchise?
Yeah, I guess that's one argument to be made. The way we look at it is that it's a 1.5 billion unit per year market. And if I have to be dependent on a market, I might as well be dependent on a really big one.
Well, true, but then at this point, it seems as if that Apple is dependent on making sure, is dependent on the iPhone franchise, and that if they disappoint, it cannibalizes other products, or it cannibalizes as one product gets launched, it cannibalizes the current one. I mean, this could be a situation that can be quite troubling for the company in the future, can it not?
It could be, except we think Apple's going to start tiering the market. So they're keeping their 3GS, for example, and their 4. The 3GS, we think, will be a great emerging market product, prepaid market. As the 3GS and that lower-end iPhone SKU starts to ramp, it should mute and moderate some of this product launch variability that we saw with the 4S. So, for example, if we had Latin America, China, India, and these other countries buying, say, I don't know, 50 to 100 million lower-end iPhones, then when they launch a new phone and we see a $3 to $5 million inventory change, it would just mask it.
Peter, let me ask you about the fact that Apple has always been consistent, right, about lowering their estimates or setting expectations very low and then beating those expectations. The fact that this didn't happen this time around, what does that tell you? What do we expect from Apple going forward from here in their earnings front?
Well, there's a little bit of a fine point here. They actually beat their expectations by more than 10%. So the guidance they gave the Wall Street was a lot lower, but Wall Street unfortunately got a little excited. We got a little excited. We saw huge build plans. We saw huge pent-up demand, and we went far and beyond that. So it really wasn't Apple's fault. They told us their guidance. They came in 10% better than that, and we just went way beyond that.
So there's no concern then that they're going to be more inconsistent with their guidance at all then, Peter?
No, in terms of them missing their guidance, it hasn't happened in, I can't think of the last time that they did that. In terms of them missing consensus, this was the first time in over 5 years. So there needs to be a line drawn here. Their guidance and what they gave, they beat and they exceeded.
Would you be a buyer here on this pullback?
Absolutely. We have a $500 target. We'd be buyers on weakness. We think we're going to have a great Q4, and importantly, we've got some great products coming out next year.
And Peter, at what point are we going to hear more from Apple about the $76 billion in cash that they're holding?
Well, it's funny. They changed their tone on the call last night. They talked about the fact they're not going to be religious about cash. If you think about it, by this time next year, they'll have probably around $120 billion of cash on their balance sheet. That is probably excessive. So we could see a significant buyback and or dividend, because the reality is they cannot deploy that cash fast enough.
And you expect that in what period?
We expect an announcement probably second half of next year, if I were to make a guess.
Second half of next year. All right. Peter, good to talk with you. Thank you so much for joining us on Apple. Peter Misek.